Hello everyone. Let's briefly go over what happened in the market over the past week. At first, the market broke the 12-hour level across the entire market, and soon after, a reversal zone appeared on the 8-hour time frame. In such situations, it is important to understand exactly where the market stops and what causes the trend change. By the 14th, the market was clearly flipped into a downtrend. After that, the daily time frame was taken, which opened opportunities for scalping long positions. When structures like this appear, they can signal potential long entries because the 12-hour, 14-hour, and 4-hour time frames are in the green zone. After that, the market tried several times to flip the daily time frame, and eventually it succeeded. This happened on March 18th. At that point, it became clear that shorts had entered the market, and the final downward move had begun. The price moved into a contraction, and once the cone closed, a short opportunity appeared. On another account, I scalped that move. I closed one position almost exactly at the moment the cone closed. I wanted to re-enter from the 3-minute time frame, but there were no signals. So I entered from the 1-minute time frame instead and managed to capture roughly 2 trades of about 1% each, relative to the deposit. However, on my main account, where I trade strictly according to the strategy, the results were worse. During the week, I took 1 short and 1 long position. The short was almost completely closed by stop losses, resulting in roughly a $15,000 loss. The extremum looked good and the position was even in profit at one point. But according to the strategy, I do not close trades manually. I only exit through stop loss or take profit. After that, I opened a long position on the upward breakout. Some coins performed well, but many positions were stopped out. Overall, the market right now is very complex and unpredictable. We are either close to a bottom, or the market might still show us a new lower low. Price is constantly moving back and forth, and this type of environment is much more suitable for scalping. Waiting for take profit or stop loss in these conditions is difficult, so sometimes you have to accept losing trades. But this is normal for the strategy. Around 39% of trades currently close at stop loss, while the overall win rate is 61%. We've seen similar periods before. When the market is trying to decide its direction, you often get sequences of losses and wins. But after these phases, a strong directional move usually begins. If you look at higher time frames, you'll see that major trend movements happen less frequently, but they last much longer. Our task is simply to wait until the market forms a clear reversal structure. After that, strong directional moves appear again, and the strategy starts producing profitable weeks. Right now, the most important thing is preserving the deposit. That is why I trade with strict risk management, strict rules, and clear limitations. This is the only way to protect yourself from large losses during periods like this. Now we'll see what the next week brings. If we look at the last 4 weeks, the market seems to be gradually testing the possibility of a move upward. Over the last 3 days, the price has been moving closer to the neutral zone. These types of formations usually converge toward that area before a breakout happens. However, the daily time frame closed weakly, which already indicated weakness yesterday and the day before. When the market truly wants to go up, it usually shows a sequence of strong upward moves where buyers are willing to pay higher prices. But those periods don't happen very often. Today we also have the Fed rate decision, and the weekly candle will close in a few hours. It will be interesting to see how it closes. Pay attention to the level around 63%. Remember this point, and in a week we'll look at what happened. Have a great week.